Hello, ladies and gentlemen. Happy Friday to you. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, it's the last trading day of the week, and this promises to be another interestful session as we will be looking into the market and see how market participants will be rounding off on their trading activities ahead of the weekend. Well, before we kickstart, let's run through our daily routine to confirm that we are all on the same page. If you can see my screen and you can hear my voice loud and clear without distortion, please let me know in the comment section by typing in hi. Your highs will give me a positive feedback that we are good to go this morning, and thank you very much as you do so. I'm seeing a handful of feedbacks here. Thank you very much, guys. I'm loving the energy this morning. Okay, from Murdoch, good morning to you. 01942811711 says he's new here. Well, glad to have you around with us. I'm always excited to have newcomers in the house. Good morning to you. Negota says he's new here also. Glad to have you around. Samya87, good morning to you. Milonati, good morning to you. Isaiah 0168, thank you very much. Hello, Leonardo DV, glad to have you around with us this morning. I can see Shamot 177. 587-88697. Happy Friday. Good morning. Hello, Carrie. Good morning to you. Glad to have you around with us this morning. Leo225 and on the Neil. Good morning to you guys. You guys are just too wonderful, and thank you very much for this positive feedback. So, with that being said, I think I will take this as a confirmation that we are all on the same page. As you can see my screen, hear my voice loud and clear. And on that note, we shall begin the session for today. And in this note, I welcome you all once again to yet another promising edition on the X-Trend Speed Live, your daily dose of financial insight and trading strategies. I'm so excited to be with you here this morning, and in fact, since the beginning of the week, we have been monitoring four major financial instruments, including the USOILSPOT, the USTech100, the GBPUSD, and of course the XAUUSD, and of course on the USOILSPOT and the USTech100, we've done very well on those particular assets. The GBPUSD has been a little bit choppy during the course of the week, and of course the XAUUSD didn't do very well at all as a result of the anticipation of the CPI data from yesterday. We saw how the market went into a consolidation phase before that volatile movement in price action happened yesterday. So today we are going to be looking at the structures closely and what really happened and how we intend to position ourselves for the next move. And it's also important for us to note that today being the last trading day of the week, it also comes with its own peculiarities, as major key players in the market are likely going to be rounding off on their trading positions, trading activities ahead of the weekend. And when this happens, we usually see price action go through a reversal from the prior leading price action in anticipation of another wave of either selling opportunities or buying opportunities, depending on where price action was coming from through the course of the week. So I encourage us all to stay tuned in so we don't miss out on any of the valuable ideas we will be deliberating on today as we round off the week's trading activities. I see your comment here, Dida T. Dida T says that it's echoing a lot while you talk. All right, so I'll just give it a moment to check what you're talking about here and see if it's from my own end. And if anyone else experiences such, please let me know in the comment section so I know that it's not only peculiar with D.T. From my hand here, things are working quite all right. Please let me know in the comment section if you experience the same thing. D.T says that it's not echoing from my own hand here. I wonder why that is, but I would suggest that you probably restart your app or restart your phone and let's see what that says. And let me know in the comment section. All right, Didati. Thank you. All right, so for those of you who are joining us for the first time, you highly welcome on board. Glad to have you around with us this morning. Trust you are doing very, very well, and I'm very sure you will be wondering what this is all about. Well, briefly, as technical traders, we usually gather here every day, coming together as a community and engage in follow-ups and reviews of our current positions in preparation of the New York sessions. Well, the Extreme Space Live technical session usually kickstarts 10 a.m. UTC, 11 a.m. West African time, and I recommend that you stay tuned in during the course of this time so you don't miss out on the insights that we will be sharing today. My aim in this community is to equip us with the knowledge and skills necessary to make informed trading decisions independently. Remember, the more time you spend with us in this community, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I welcome you all and encourage you to actively engage in the comment section. So with that being said, we shall be diving right into the business for today. And as usual, the first thing we normally do is to keep tabs with the fundamental factors that is likely going to be affecting the market sentiments today. And for those of you who have been with us for a while, you know how important this is, as these fundamental factors often manifest on the charts in technical patterns and price movement. Now, by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Well, since the beginning of the week and based on the assets on our watch list, we have been focusing on high impactful events from both the United States and the United Kingdom economic docket. Well, for today, we have a couple of impactful events, though we only have one high impactful event. So I took it a step further to include the medium impact event so that we can have a broader view into what majority are likely looking forward to today as a catalyst to drive price movement. Now, remember yesterday we were anticipating the CPI data, the most anticipated event for this week, and it was a very important event due to the fact that it plays a major role in having an insight into the inflationary status of the United States. And of course, we all know that a higher than expected CPI can lead to concerns about inflation, impacting market sentiment as it may prompt expectations of tighter monetary policy to control rising prices. And of course, we were caught by surprise yesterday as we saw data coming in beyond expectations, as we had the year on year coming at 3.4% higher than the expected 3.2%, giving us a positive deviation of 2.24%. And at this point, we begin to see that majority are beginning to withdraw their stance as regards to rate cuts as early as the month of March, as right now we do not know how the Feds are likely going to be reacting to this data. So in that regard, we look forward to the producer price index coming up later today from the United States economic docket to give us some more fresh impetus into what the Feds are likely going to do. Now, for those of us who don't know what the producer price index is, well, this data is usually released by the Bureau of Labor Statistics, the Department of Labor, and it measures the average changes in prices in primary markets of the United States by producers of commodities in all states of processing. Generally speaking, a high reading is considered to be positive for the economy, resulting in a positive traction in favor of the US dollar, while a low reading is seen as negative. Now, if we look at the previous data for the producer price index for both the year-on-year and the month-on-month, you'll see that it came in at 2% and 0% respectively. Now we have consensus projecting a 1.9% and 0.1% respectively. So we have a couple of mixed data there to look out for today. So we're looking forward to see what the actual data is going to be. Will it be just as expected, below expectations, or even beyond expectations? Then earlier this morning, we witnessed a handful of events from the United Kingdom. Of course, we had some good news where we saw how the manufacturing production on the month-on-month terms increased by 0.1% from the expectation at 0.4. We also saw the industrial production maintain its status quo. Then the gross domestic product, we saw an expansion of the United Kingdom economy by 0.3%, higher than the expected 0.2%. So today we are going to be looking at how the market had reacted to this event and how we intend to position ourselves for the next move. Then later on today, we look forward to a speech coming in from the United States Economic Docket, and that is from Neil Kashkari, who is the President and Chief Executive Officer of the 9th District Federal Reserve Bank at Minneapolis. And he's also a serving member, a voting member of the Federal Open Market Committee, which makes more concrete whatever he has to say. As everyone today will be looking forward to see what he has to say, and whatever he says today will be giving us an insight into the monetary policy outlook of the Federal Reserve, especially after we had a higher than expected CPI data yesterday. So these are the impactful events we're definitely going to be looking out for today. And of course, as technical traders, we do know that the anticipation of this event, of course, affects the market sentiment, which in the long run will reflect on the chart as price action. Now, talking about price action, the first asset we are going to be looking at today, as usual, is going to be the US All Spot. And so far this week, we've done pretty well on the US All Spot, as we have had situation where we sold. And since Tuesday's trading session, we have been looking out for buying opportunities in this market as price action continues to maintain its momentum above the ascending trend lines we identified on our charts. Well, since the beginning of the week, and for the sake of those who are not part of our earlier editions, let's quickly run through what really happened since the beginning of this week. Now, at the beginning of the week, we initially identified a range after noticing how the week started on a very strong bearish note, as we saw here, and of course waited for the breakdown of the support line to trigger our first sell position for the week. And in fact, we saw how price moved about 230 pips in our favor before the bullish momentum began here. And of course, you know how we do it in this community. When price action moves significantly well in our favor, we move all stop losses to secure the current position. And if you had done that, you must have been taken out with a minimum of about 150 pips on that one. Then later on Tuesday, we begin to notice how it has become difficult for sellers to break through the $70.40 area. As we saw, as soon as price got into that level, we saw price find buy pressure, pushing price to the upside, and in fact finding a higher low to further emphasize the strength of the buyers. And when we took it a step further, we saw how price action appeared to transition into what looks like a reversal pattern in the form of a double bottom structure, where the neckline shares a beautiful confluence with the resistant line of the range at the $70 $1.20 area, and of course the breakout of that structure was all we need to capitalize on an uptrend move. Though some of us missed out on this opportunity, but we saw our price came back to retest the structure, giving us another buy pressure here to inside the current momentum we are enjoying right now. And if you would remember during our live session yesterday, we newly identified another ascending trend line after capturing the series of higher lows in the last 3 to 4 days in this market. As we said, we will be using this trend line yesterday to guide our trading decisions, and that if price at any point in time comes back into the trend line, we shall look out for buy pressure around the $72.20 level to capitalize on an uptrend move. And you saw what happened here. Price had continued to climb new highs, breaking out very important level, and in fact at this point it has broken out of the key level at the $74 area. At this point in time, you should be having a minimum of 1, 2, 3, 4, 5 positions running in profit right now. And for those of us who capitalized on this opportunity, well done and kudos to you for being on standby to capitalize on this move. And as it is right now, we have, okay, the first position is running with about 220 pips in profit, while the second is running with 175, and the third one is running with about 128. Fourth one is running with about 56 pips in profit, and the last one here is running with about 40 pips. So we're having over 700 pips in profit on this particular asset. And for those of us who capitalize on this opportunity, well done and kudos to you for being on standby to capitalize on this opportunity. And for those of us who will still have a buy position running at this point in time, you know how we do it. The next thing we want to be doing right now is to ensure that we secure all the current buy position here as we anticipate the PPI data coming up today, and of course the speech by Kashkari later in the day. And if you would ask me, based on this current structure, I will be suggesting that anywhere below our key level for this week at the $74 area seems most appropriate to move all stop losses to. And always remember that while you move your stop losses, you want to be given enough breathing space for price action to move around. Now, with a well-secured position at this juncture, what is going to be our plans for today? How are we going to continue buying this asset, or are there chances that sellers will come in at any point in time? Well, it's imperative for us to secure the current buy position, as we could see some volatility happen today. And another thing I would like to state here is that price is finding a second consecutive day of ascent, which of course is propelled by escalating concerns over potential disruption in oil supply in the Red Sea. Yesterday we heard of the recent airstrikes led by the United States and the United Kingdom targeting the Iran-backed Houthis in Yemen, heightening the apprehension that this situation might escalate the Israel-Gaza conflict into a broader regional crisis. Moreover, the release of Chinese trade data for December yesterday actually surpassed all expectation, as the potential to provide additional support to crude oil products now increases at this point. So for me at this point, I'm of the opinion that there is a high chance the price will continue to the upside based on the current factors I just explained here, and in that regard we shall continue to look out for more buying opportunities. However, if we look at things from a technical standpoint, I'm of the opinion that since price has broken out of our key level at the $74 area, let's maintain a bullish bias and use that area as a barrier to guide our trading decisions going forward. Now, for the sake of those who missed out on our earlier sessions, let's quickly run through the higher time frame and have an holistic perspective into what is going on in the market. And in fact, I would like us to see that beautiful setup we saw on the daily time frame that helps to further confirm the potency of buyers in this market. Now, on the daily time frame, what we did at the beginning of the week was to take into consideration the nature of price action since the month of September, and what we found here was quite interesting, as price action had consistently and uniformly found lower highs in this market. And when we connected the series of lower highs, we had this beautiful descending trend line to work with. And considering this bearish momentum, considering the descending trend line, you know how we use it whenever we have this. We look out for more selling opportunities as long as price action remains below the descending trend line. However, something interesting happened during the month of December. I think the first week of December, we saw how, despite the strong bearish momentum, sellers found it difficult to break through the $69 area. This same scenario repeated itself again at the beginning of the year, as sellers found it difficult to break down the previous low, giving us a higher low to work with. And in fact, we saw our price action appear to be transitioning into a potential reversal pattern. As you will see here, price came back into the structure, and with a higher low, we were looking at a potential double bottom structure where we were able to mark the neckline of that reversal pattern around the $75.50 level, and of course the key level at the $74 area. And one of our expectations at the beginning of the week was that if price action can break out of the descending trend line, the neckline, it will also have broken out of the descending trend line to emphasize the strength of the bias in this market. So we had a beautiful confluence between the descending trend line and the neckline. Now look at what has been going on right now. Price has finally broken out of that descending trend line to emphasize the strength of the buyers here. Now, with the simple structure we have on the daily time frame, it makes quite a lot of sense that we continue to maintain a bullish bias, especially after price action is currently trading just right around our $74 level, which happens to be our key level for this week. And of course, you know how we use our key levels in this community. As long as price action remains above the key level, we continue to look out for patterns and structures that support the idea of buying that particular asset. And if price can go on further to break out of the $75.50 level, we shall be looking out for more opportunities to maximize the potential of this bullish move. Now, with this understanding we have on the daily time frame, let's scale back down into the 1 hour time frame, where we want to be marking out levels that we will be using to capitalize on this newly imagined buy pressure in this market. So scaling down into the 1 hour time frame, we begin to see things more clearly, and as you will see that we've capitalized on multiple entries in this market, capitalizing on the $72.20 level, the $72.65 area, the $73 level, and of course the $73.75, and finally the key level has been broken to the upside. Now, with the situation we have here, price taking out all the sell positions along the $74 area, I'm of the opinion that this level or zone may become a new platform for buying opportunities. Now, for those of us who had missed out on this opportunity, well, let's see and exercise patience to see if the market will come back, retest the structure in an attempt to incite another wave of bullish momentum. So I would like, for those of us who missed out on this opportunity, let's mark out these levels and let's see if the market at any point in time may come back to retest the structure in anticipation of an uptrend move. Now, in addition to this, I want to look out for more levels that we can actually use to capitalize on more buying opportunities here. And if we look at this structure closely, I think we have something around the $75 area, which we want to be adding more position if price action ever breaks out of that area. And while we're looking out for more opportunities above the $75 level, I would like us to move our stop losses as soon as price test that level. Move your stop losses accordingly. Remember, this level at some point, let's say since the month of December, has been a strong selling niche in this market, as buyers have found it difficult to break through that area. So we move our stop losses accordingly. Let's see how the market will react to the structure to capitalize on that uptrend move. So this is my simple view on the US All Sports for today. I still maintain a strong bullish bias here, considering the fundamental factors I emphasized on earlier. However, if price gets into the $75 area and we begin to notice some selling pressure around that area on our lower time frame, where price action probably transitions into a reversal setup, maybe like a double top structure, head and shoulder pattern today, we might be seeing an opportunity to sell. So if we have a reversal pattern evolve around that area, please mark out the neckline of the reversal pattern, and the breakdown retest of the neckline could incite a sell-off to the downside. So let's take this, put this in mind while we continue to monitor price action from here. If you have any questions whatsoever, feel free to let me know in the comment section. As usual, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. All right. In the absence of no questions, I want to assume that we are all on the same page. And in that regard, we shall be moving on to the next asset on our watch list. But before I do, I'm seeing some comment here. I see Tisha, I see Mohammed Daras, I see Julius75. You guys are great. Glad to have you around. And please, dear viewers, beware of spammers in the comment section. Extreme Speed disclaims any liability for individuals redirecting you to external platforms for financial advice. Please exercise caution and rely solely on the official Extreme Speed channels for legitimate information. Please be mindful of any of these spams in the comment section, okay? Be very careful. All right. So in the absence of no questions, let's move on to the next asset on our watch list. So the next asset on our watch list for today is the USTech100, popularly known as the Nasdaq, and the last 24 hours has been quite interesting. We did witness some volatile movement in price action yesterday, which gave in some counter trend opportunities. For those who took counter trend moves yesterday, you must have had some significant amount of profit as price action dropped and broke down that range we identified during our live session yesterday. And quickly, let's run through how the week started for us. It has been a phenomenal profitable week for us since the beginning of this week, as we have been buying this particular asset. Now, for the sake of those who are not part of our earlier editions, let's quickly run through this together and see how we took advantage of the buying opportunity. Well, at the beginning of the week, we had a couple of factors here. First of all, we had some couple of ascending trend line, which incited the idea that we want to be looking out for buying opportunities. First of all, we had this trend line and we projected it to the higher highs here to give us a beautiful ascending channel to work with. Then in addition to these trend lines, we had a range identified where we saw that in the first 13 to 15 hours of the week, price action was initially confined within the 16,342 and the 16,275 area to emphasize the level of indecision at that particular point in time. And of course, you know how we do it in this community. Whenever price action falls into a range like this, we exercise patience, waiting for a signal in the form of a breakdown or breakout of that range to give us an opportunity to trade. And for the fact that price action remains above both our key level and the ascending trend line, we were looking at the breakout of the resistance line at the 16,342 level to capitalize on an uptrend move. And as a result of this, we had a buy stop order above the 16,342, which actually triggered our first buy position for the week. Then we continue to add more positions at the breakout of the 16,400, and in fact we rode that momentum all the way into the 16,650, giving us about 300 pips on the first buy position and about 250 pips on the second buy position, with a total of over 550 pips. And of course, I did mention on Tuesday's trading session that we do want to be moving our stop losses on that buy position to secure it and ensure that we don't get caught up with any sudden pullback that happens around that area. Now, with our stop loss in place, we had those positions taken out by sellers, giving us about 400 pips thereabout, depending on where you place your stop losses, and that's registered our first profitable position for the week. Now, I'm sorry for the break in transmission. We have to sort out some things here. So, like I was saying, we had a very profitable start to the week on the USTech 100 as we capitalized over 500 pips on that first position. However, on Tuesday's trading session, we begin to notice price falling into a range again to emphasize the uncertainty that gripped the market on Tuesday's trading session. And of course, you know how we use our ranges. Whenever we identify them, we exercise patience and look out for opportunities at a breakout of or breakdown of those structures. Though I did mention that for counter trend traders, you might want to look at breaking down, retesting of the 16,560 to join a bearish move. But for those of us who are maintaining an uptrend situation, we were looking out for the breakout retest of the 16,650 to maximize the potential of the bullish move. And since then, we have been buying this asset. During our live session yesterday on Wednesday, we decided to add more positions at the 16,715 level. Now, during our live session yesterday, we began to notice that the market was consolidating, especially during the Asian session, as price action was confined within the 16,900 and the 16,825 area, as everyone was anticipating the CPI data for fresh impetus on what to do next. And one of the things we said here yesterday is that we shall be looking out for more opportunities if price will break out of the resistance line at the 16,900, which of course triggered another buy position, but we got taken out on that one. And of all the other position, as you all know, we had our stop losses right below the 16,825. And I did mention that if you are a counter trend trader or a scalper and want to take advantage of counter trend opportunities, that a breakdown retest of the 16,825 will welcome selling opportunities. And of course, we saw what happened here. Price broke down, retested the structure back into the ascending trend line we spotted here during the early hours of the week. And we said if price retests the structure, we might be seeing an uptrend move, but it's okay. For those who capitalize on that bearish move, well done to you, as we saw price move about 220 pips plus to that area before the bullish momentum come in. And I do hope that you moved your stop losses accordingly, like we usually say in this community, that whenever price action moves significantly well, you move your stop losses and secure your current position. And if you had done that, you must have been taken out with a reasonable amount of profit. Now, as it is right now, in anticipation of the speeches from Kashkari and of course the PPI data coming up later today, how do we intend to position ourselves for the next move? Well, if you look at the structure we have here, everything is quite clear on the 1 hour time frame. As you will see, after price broke down this range between the 16,900 and the 16,825, you will see that price action is back to the support line of that range. And since price got into this area, we have continued to see selling pressure from that 16,825, becoming a barrier for buyers to break out of this particular structure. And from a technical standpoint, when price action breaks down a key level or support line, just like what we have here, we expect that some point in time price may come back, retest the structure to incite a downtrend continuation. Now, going into the New York session today, the question here is, will this be the beginning of a downtrend move? As you will see that in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, and 16 hours, price action has been confined within the 16,825 and the 16,780 to emphasize the level of indecision going on at this point. And of course, you know how we do it whenever we have a range like this. We exercise patience and wait for either the breakdown of the support line to give us an opportunity to sell, or the breakout of the resistance line to give us an opportunity to buy. Now, let's quickly talk about the potentials of sellers here. And if you look at what has been happening since in the last 24 hours after price action tested that highest point for this week at the 16,900, we saw a sharp rejection of that area, which of course is a sign that sellers are stronger around this area. And this sales situation here could evolve into a profit-taking activities, which will reflect on the chart as a retracement move to the downside. And as a result of this series of lower highs, we do want to be connecting them together so that we can have a trend line to work with for today's trading session. And if we can do this appropriately, we have something to work with. Now, with this trend line here, we shall be using this trend line as a yardstick to guide our trading decisions for today. And of course, you know how we use our descending trend lines in this community. As long as price remains below the descending trend line, we continue to look out for patterns and structures that supports the idea of selling that particular asset. Now, if this selling pressure persists, we shall be looking out for selling opportunities at the breakdown of the support line of this range at the 16,780, and with the hopes that we can continue to maximize the potential of that bearish move if price action can break down the ascending trend line we spotted here a couple of days ago. And one interesting thing about this ascending trend line is how it also shares a beautiful confluence with that 16,650 level. So as soon as price gets into that area, let's ensure to move all our stop losses, secure the current sell position, and wait to see how the market would react to that trend line. Now, if price breaks down the trend line, retest of structure would be beautiful opportunity to add more positions to our existing trade. So this is how we are going to be looking out for selling opportunities on this one. However, if price gets into the trend line and we begin to see some buy pressure emerge around this area where price action transitions into a reversal pattern, let's say a double bottom structure, head and shoulder pattern, or whichever case it may be, we look out for buying opportunity at the breakout of the neckline to join an uptrend move. So you can see how crucial this trend line will be in guiding our trading decision as soon as price action breaks down the support line at the 16,780 level. Now, in as much as the possibilities of a breakdown of the 780 level is increasing, considering the descending trend line we've marked out here, we cannot ignore the potential that buyers could still break out of this descending trend line to incite another wave of bullish momentum. Of course, the momentum has been very, very bullish since the beginning of the week, and in fact, if price action can take out this descending trend line, a breakout of the 16,825 will be a beautiful opportunity to join the uptrend continuation. So at this juncture, you would agree with me on how important this descending trend line is going to be for today. As long as price remains below the descending trend line, we shall maintain a bearish bias in this market, looking out for selling opportunities at the breakdown retest of the 16,780. However, if this descending trend line is breached to the upside, then a breakout of the 16,825 will welcome more buying opportunities, and if price action goes on to break the highest point for the week at the 16,900, we look out for more buying opportunities in this market. So this is my simple view on the US Tech 100 for today. I do hope you find it comprehensive enough. I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions whatsoever, or you need some further clarifications, feel free to let me know in the comment section. So in that regard, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. Hello, Giovanni. Good morning to you. Hello, Bobby Jones. Good morning to you. So Agwan, good morning to you. Trust you all doing very, very well this morning. And please, reminder again, beware of spammers in the comment section. Extreme Speed disclaims any liability for individuals redirecting you to external platforms for financial advice. Exercise caution and rely solely on official Extreme Speed channels for legitimate information. Thank you very much as you do so. So with that being said, here we will be moving on to the next asset on our watch list. So the next asset on our watch list for today is the cable market, of course, the GBPUSD. And since the beginning of this week, we have been buying this asset, though the traction hasn't really been impressive at all, as every time we buy, it doesn't take long before price action comes back to our entry point. And we all know why that was happening. Prior to the CPI data yesterday, everyone was looking forward to figures from the CPI data to for fresh impetus on what's next to do. And since the beginning of the week, we have been buying this asset at every point in time. it breaks out of the 1.272. Look at what happened here at the beginning of the week. We had this first buy position triggered around this area. We added one more position, and in fact we had a total of about 65 pips thereabout before the bearish momentum came in at that point. Then we also added another one here. Unfortunately, that one went into a loss on Tuesday. Then on Wednesday's trading session, we had the privilege of adding one more. We had another one right here at the 1.273, the 1.27400 level, and of course the 1.2765 before the sell momentum came in again. And of course, moving our stop losses accordingly, we got taken out on where we moved our stop losses, giving us a reasonable amount of profit, though it wasn't that really significant at all. And during our live session yesterday, I did mention here that the momentum in this market is still looking very, very bullish, considering the fact that price action still remains above the ascending trend line we spotted here, and that as long as price remains above this ascending trend line, we'll continue to look out for buying opportunities. And I did mention that the only condition that will make us want to sell this asset is for this trend line and the key level to be broken to the downside, giving us a significant confirmation like a retest of structure before jumping into any sell position. And of course, this never happened. And currently we have a buy position running right now, and I already got taken out of this one. And if you still have your buy position running, please move your stop losses, secure your position above the 1.274 as we continue to monitor price action from this particular area. Now, with the way things are going right now, what is really happening in this market? Now, alighting the prevailing market indecision, the GBPUSD was trading within a range throughout the Asian session, as we saw how price action was confined within the 1.27850 and the 1.27650 level before it got broken to the downside a couple of hours ago. And in positive news from the UK, we saw the industrial sector. The industrial sector, we saw how it rebounded in the month of November. And of course, the monthly real GDP expanded by 0.3%, while the yearly industrial production saw a slight contraction of 0.1%. And on the USD front, the latest US inflation report presents a potential challenge to the Federal Reserve plans for interest rate cuts this year. The US Consumer Price Index, like we said earlier, exceeded expectations in December, rising by 3.4% year on year compared to the expected 3.1% increase in the previous month. Now, this development may exert pressure on the upward trajectory of the pound sterling, which of course we have been seeing in recent time. As you will see that throughout the course of this week, price action has been finding certain pressure as soon as it gets into the zone right above the 1.27650, making it a strong barrier for buyers to break out of. Now, considering these dynamics in this market, it is prudent to safeguard all the current buy position if you still have any running, while remaining vigilant for new trading opportunities, as market participants will closely monitor upcoming producer price index from the United States docket, anticipating fresh impetus for potential price movement. Now, if we look at the structure from a technical standpoint, I still want to insist and hold on to a bullish bias. And why is that so? Well, looking at the structure, our ascending trend line, which of course has been supporting this bullish momentum since the beginning of the week, still remains very intact. And as long as price remains above the ascending trend line, we shall continue to look out for patterns and structures that support the idea of buying these assets. So as long as price still remains above this level, we shall maintain a bullish bias. But we cannot ignore how this area here has continued to be a strong selling niche in the last 1 week. And if the selling pressure persists like it has always done in the last 5 days, a breakdown of the ascending trend line would be all we need to be part of a downtrend scenario. And interestingly enough, the ascending trend line shares a beautiful confluence with our key level at the 1.27200 area. Now, you know how we use our key levels. When price breaks down the key level, we want to be looking out for patterns and structures that support the idea of selling that asset. Now, if price can break down the key level and the ascending trend line, then we can start considering selling this particular asset. But there is one thing I want us to take note of. We are not getting excited. We are not jumping into a sell position right away, as we will need some confirmations to happen before jumping into that sell position. So what I want to be looking out for is a retest of structure on my lower time frame, giving me signs that buyers are finding it difficult to climb back above the ascending trend line. And if this happens, I want to be part of a downtrend scenario. A further breakdown of the 1.2700 area will welcome more selling opportunities, and if price continues to jump to the downside, then a breakdown of the lowest point for this week at the 1.26750 level will be welcoming more sell positions. So we are only looking for sell positions only if the ascending trend line and the 1.2700 level is broken to the downside. So that is the only condition that will make us want to be selling the GBPUSD. Now, since I said that I'm still maintaining a bullish bias here, remember what I said earlier. For those of us who still have a bullish buy position running, I told us all to move our stop losses above the 1.2740 area while we continue to monitor and see if this momentum will continue to the upside. Now, for me to add more positions to my existing buy position, I would like to see price take out the highest point price action has been for this week, which is at the 1.27850 level, to incite an uptrend move. So a breakout of this structure will be all I need to join an uptrend move. And if price action can go as far as breaking out of the 1.28270 level to 28250 level, I will be adding more buy positions to my existing trade. So I have buy stops orders above the 1.27850 and above the 1.28250 to maximize the potential of that bullish move. So we continue to maintain a bullish bias as long as price remains above the ascending trend line we projected here. If you have any questions, feel free to let me know in the comment section. And because of my time right now, I wouldn't be taking a break. But if you have questions, just drop them in the comment section. And trust me, I will be checking it from time to time to see if there are any. So with that being said, I will just jump right into the last asset on our watch list for today. And of course, the last asset on our watch list for today is my favorite asset, and that is the XAUUSD, popularly known as the gold spot. Currently, I have a very beautiful buy position triggered, and I do hope you also capitalize on this one. But before we go into that, let's quickly run through how the week has begun for us. For the XAUUSD this week, it has not been a rosy week for us at all on the XAUUSD, as all the buy positions we took throughout the course of the week were going into a loss. We had a first buy position right here. Now, let me start from where the week started. We had some sell position initially at the beginning of the week, which we saw price move about 100 pips before the bullish momentum came in. And for the fact that price action was finding buy pressure around the $2,027 area, we maintain a bullish bias in this particular market. And as a result of this, we were looking at price breaking out of our key level at the $2,035 area to capitalize on an uptrend move. And unfortunately for us, at every point in time we joined that bullish momentum, we saw price drop to the downside, hitting our stop loss and taking us out in a loss. The same thing also happened on Wednesday. We saw what happened here. Price broke out of that structure. Unfortunately, it went into a loss. And during yesterday's trading session as well, prior to the CPI data, and during the CPI, we saw some volatility in the market. We had our buy position triggered, and unfortunately, that one too went into a loss. So it wasn't really a promising week for us at all, but we hopefully think that today we will be able to recoup some of the losses we made during the course of the week and probably build on it when the new week begins. Now, after experiencing 3 setbacks in our previous buy position this week, XAUUSD has faced a challenging performance for us all, and the gold prices is currently benefiting from an overnight bounce amidst a weaker US dollar. And personally, we remain hopeful that this traction will be sustained, especially considering the price remaining above the identified demand zone we identified on Tuesday around the 2020 and the $2,027 area. Remember, we did saw this as this demand zone where we did confirm that sellers were finding it difficult to break through that area, and as a result of this, we identified this zone between the 2020 and the $2,027 area as a strong demand zone in this market. Now, at this juncture, despite the slightly elevated US CPI, the anticipation of a Fed rate cut in March could potentially impact gold's performance. However, geopolitical risk and concerns over China's economic challenges continue to favor safe haven assets like gold. However, from the report we got yesterday from China, we saw that they turned out a positive trade balance. I think I had some comments on that one somewhere here. I would like to read it to you guys. I saw here that, let me see. Yes, the Chinese trade balance in US dollar for December rose to about 75.34 billion from the previous $68.39 billion, surpassing the expected 74.75 billion. Now, the export figure exhibited a growth of 2.3%, surpassing the expected 1.7%. Meanwhile, the year imports in China released by 1.6% compared to the previous 0.6%. Now, these positive trade figures from China may contribute to increased sentiment for the safe haven assets, maybe. And one thing I want us to be looking at from a technical standpoint here is to see how we can maintain a bullish bias in this particular market. Now, at this junction, another buy position has been triggered. I did mention that. Remember, we have been looking out for buying opportunities as long as price breaks out of this key level at the $2,035 area. And if you remember what we did here yesterday to further emphasize the importance of this key level at the 2035, after we did consider the nature of trading activity since the beginning of this year. Of course, the gold has been spiraling to the downside, and while it does so, we saw how price uniformly transitioned into a series of lower highs, giving us this beautiful descending trend line to work with. And you know what we looked at here, we saw how the descending trend line, if it gets broken to the upside, breaking out of the key level as well, will be a good opportunity for us to join. And as a result of this, we had a buy position triggered, had a breakout of the 2035 area. And in fact, if you had capitalized on this, well done to you for joining this move. And then remember that we also had another level marked out at the $2,040 area, which already has been triggered, and we also have another one at the $2,046.50 level, which has also been triggered right now, and we have a final one at the 2050. Hopefully, if that one also get triggered, we may be able to recoup some of the losses we made during the course of the week. But trust me, since price has moved significantly well in our favor, we do want to be moving all stop losses to secure this current buy position. So the first buy position is running with about 112 pips in profit, while the second one is currently running with about 62 pips in profit, giving us a total of 170 pips approximately. So If you would ask me, move our stop losses to anywhere above the $2,040 level, while you also remember to give enough breathing space for price action to move around. Now, the upward momentum lacked some follow through due to uncertainty over the Federal Reserve's rate cut. Additionally, the recent consolidative move that happened around the 2035 level could be some level of concern for us. So this move right now still not really very decisive. So we still need to look forward to the U.S. Producer Price Index and of course the speech from Minneapolis Fed President, that is Kashkari, for potential fresh impetus to further strengthen this momentum we are currently enjoying at this point in time. So let's see how the market will play out. We have the multiple levels, and like I said earlier, I still maintain a strong bullish bias in this particular market. So that is my view on buying the XAUUSD today. So we still have one more level at the 2050 to maximize this move to the upside. Now, talking about selling right now, if at any point in time, probably when price gets into this area around the 2050 and the $2,046 area, we could likely see some selling pressure happen here, just like it had done since the beginning of this year. Look at what has been going on here: selling pressure, selling pressure, selling pressure, and only here we had a little bit of a breakout, but it didn't last long as we saw selling pressure come in again. So it's very, very likely that we may have the same scenario happen here, and if it does happen, it doesn't negate the bullish momentum yet. As you will see, price just broke out of the descending trend line, and from a technical standpoint, when price breaks out of a trend line like this, we expect that some point in time price may come back, retest the structure in anticipation of another wave of bullish momentum. And interesting enough, that structure shares a confluence with that demand zone we identified for this week. So if selling pressure comes here and we see something like a double top structure, head and shoulder pattern, or any form of reversal pattern, a breakdown retest of the neckline could incite some sell-off, that is a temporary sell-off, which could be dovetailing to a minimum of 150 to a maximum of about 200 pips, which we of course do want to take advantage of if price does that. So price may come back into this area to incite another wave of bullish momentum. So let's be very, very mindful. The current buy position, let's secure it. Move your stop losses to anywhere above the 2040 while you give enough breathing space for price action to move around, and not negating the idea that sellers could still come in anytime soon. So with that being said here, I think we've done we're going to be rounding up for today's X-Trend Speed live session. I will be given the next 5 seconds to see if there are any questions whatsoever as regards to the current setup or any of the particular assets we talked about today. Let me know in the comment section if you have any questions, and then we will move on to round up on today's trading session. All right. So in the absence of no questions, I want to assume that we are all on the same page. And in that regard, we shall be rounding off for today's live session, as we were able to take on 4 major assets in our watch list for this week, including the USOILSPOT, the USTech100, and of the GBPUSD, and finally my favorite asset, the XAUUSD, all of which we were able to identify simple trading setup that we will be using to guide our decisions for today. And I do hope you will all marked out our levels on the chart, as we're definitely going to be needing them to guide our independent trading decisions for today. And if you have done so, please exercise patience and allow these structures to mature before we jump into any positions. And always remember that every decision we make in the financial market is more or less an educated guess. And as a result of this, you do want to be having a well-defined risk management strategy in place to guide your trading decisions and of course mitigates against risking too much of yourself in the market so you can live to trade another day. For those of you who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today, and if you did, you want to be part of our subsequent editions, as the more time you spend with us in this community, the better you become in understanding our analytical approach and eventually be able to use the information you gather here to make your own independent trading decisions. Monday is another day, 11 a.m. West African time, 10 a.m. UTC, as we come here again to review how well these assets have been doing and at the same time prepare ourselves for the new week. So I wish you the best of luck today. Wish you the best weekend, a wonderful weekend. Looking forward to seeing you same time on Monday morning as we come here again to prepare for the new week. Do have a wonderful evening, everyone. Trade smart, trade consciously, and happy weekend to you guys. Bye bye.